Welcome to today's What Moved the Market show. I'm your host Prem. It's Monday, November 24th, 2025, and here is everything you need to know as the markets close for today. Indian equities closed on a cautious note as we entered the final trading week of November. The Nifty 50 ended at 25,959, shedding roughly 80 points or 0.3% from the previous close. The Sensex mirrored this weakness, sliding 331 points to settle at 84,900.71, also down 0.4%. Bank Nifty felt particular selling pressure today, closing at 58,803, representing a 0.11% decline from the prior session. The overall market sentiment leaned cautious with profit-taking dominating the session ahead of monthly futures and options expiry. What's important to note is that the Indian Rupee held relatively steady today, with the INR-USD exchange rate trading around 89.24, maintaining its positioning after recent volatility. The Rupee has been on a softer trajectory given strength in the US dollar, which continues to hover above the 100 mark globally, marking its highest levels in nearly 6 months. This currency weakness has provided some support to our commodity markets, particularly gold, even as global metal prices remain under pressure. Moving to the top performers and laggards today, the information technology sector emerged as the clear winner, delivering positive momentum despite broader market weakness. Tech Mahindra led the charge with a strong 3.28% surge, driven by earnings optimism and renewed investor interest in technology services. Within the broader technology space, Inventurus Knowledge Solutions posted an impressive 3.71% gain, while ITI Limited surged 9.56%, signaling strong appetite for engineering and IT services. On the flip side, sectors like Realty and public sector enterprises faced headwinds. Hindalco Industries declined 2.76%, Tata Steel fell 2.59%, and JSW Steel dropped 2.54%, weighed down by commodity concerns and macro uncertainties. Within Realty, Anantraj slipped 2.31% as the sector grappled with rising rate concerns and subdued commercial demand. On the technical front, the Nifty 50 has formed a concerning pattern as we approach the expiry. Resistance remains firmly placed at 26,100 and 26,200 levels, which proved tough to crack today despite multiple attempts. Support has shifted down to the 26,000 mark and further down to 25,850, which remains critical for the bulls. If the index breaks decisively below 26,000, the 25,800 to 25,850 zone becomes make or break territory for the next leg of selling. Bank Nifty similarly faced profit-taking after hitting its all-time high of 59,440 earlier this week. Today's close suggests hesitation, and any break below 58,570 could trigger weakness toward the 58,250 to 58,000 range. That said, banking breadth remains strong with an advanced decline ratio of 11:1, meaning most banking stocks are holding firm despite index weakness. The sector performance story today was sharply polarized. Information technology led gains with a 1.17% advance in the Nifty IT index, followed by the broader technology sector at 0.72%. This outperformance reflects genuine earnings momentum in software services and renewed corporate appetite for digital transformation. Conversely, Realty and public sector enterprises both fell 1.09% as elevated interest rate concerns and fiscal uncertainties declared down sentiment. The advanced decline ratio across sectors stood at just 0.31, indicating that for every advancing sector, more than 3 were in retreat, painting a picture of broad-based caution. Looking at commodities, precious metals faced pressure today despite the weaker rupee. MCX gold declined 0.67% to close at 123,360 rupees per 10 grams, down roughly 830 rupees from yesterday's close. Silver meanwhile weakened by 0.25% to 153,768 rupees per kilogram, down 383 rupees. The decline in both metals reflects strength in the US dollar and muted safe haven demand. Gold internationally is holding critical support near $3,990 per troy ounce, with resistance at 4,110 to 4,185. Crude oil ended marginally higher, with Brent closing at $62.58 per barrel, up 0.03%, suggesting stable energy sentiment despite recent monthly declines of 3.58%. On the geopolitical front, one significant development gaining traction is the strategic realignment between the United States and Saudi Arabia. Washington has granted Saudi Arabia major non-NATO ally status and has opened discussions on potential F-35 fighter transfers, marking a profound recalibration of American Middle East strategy. This partnership is primarily aimed at countering Iran's expanding influence through its missile networks and regional proxies in Lebanon, Yemen, Iraq and Syria. For India, this developing equation presents opportunity without pressure, particularly as a more secure and stable Saudi Arabia remains crucial for our long-term energy security, trade relationships, and the welfare of our expatriate communities. Additionally, India's defense manufacturing has hit an all-time high of 1.54 lakh crore in fiscal 2024-25, reflecting strong growth across defense PSUs and private sector contributions, which underscores India's rising geopolitical relevance in Asia-Pacific security frameworks. Looking ahead to tomorrow's session, traders should keep a close eye on the Nifty 50's ability to hold the 26,000 level. If we close above 26,000 tomorrow, it would suggest the bulls retain some firepower and a retest of 26,100 is possible. However, a break below 26,000 could see accelerated selling toward 25,850. Bank Nifty similarly needs to defend 58,570. Failure could signal weakness toward 58,000 to 58,250. Given that we are approaching monthly FNO expiry, volatility is likely to pick up, and traders should be disciplined with stop losses. Here is my actionable takeaway for today. Technology stocks continue to demonstrate resilience and relative strength in a cautious market environment. If you missed the rally in Tech Mahindra and other IT names today, watch for dips towards support zones on any profit taking, as the sector's earnings momentum remains intact. For those holding banking stocks, the strong advance decline ratio suggests selective strength within the sector, so use any weakness to nibble on quality large-cap banking names with a 12-month horizon. Please send in your questions and market observations to our social channels, and do tune in for tomorrow morning's wrap as we head into what promises to be a volatile FNO expiry week. Stay tuned, and thank you for joining What Moved the Market today.